Welcome to Expressions, the forum where we engage with public personalities, people in government, politicians, statesmen, business people on the issues of the day. We have with us today Sanjeev Sanyal, Chief Principal Financial Advisor, Economic Advisor, the man who's behind many of the moves that the government is making at the Finance Ministry. Welcome to the show, Babu Mushai. Thank you for joining us. And along with me is Prabhu Chawla, Editorial Director, veteran journalist who will have many political questions to ask Sanjeev. I hope Sanjeev is padded up.
You are censoring me, only allowing me political questions. I'm a postgraduate in economics and taught economics for 10 years at Delhi University.
औरों के लिए भी कुछ छोड़ देंगे ना?
अच्छा ठीक है. मेरे ऊपर censorship.
No, I'm kidding. No, I'm kidding.
Sanjeev must know my book paper qualification that I'm a postgraduate from Delhi University. And I've been taught by people like Dr. Manmohan Singh and
that is a difficult qualification.
And Amritya Sen at the same time. and Sukumar Chakraborty.
Hope you're well and everybody at home is well. These are tough times. The question that everybody's asking is, has the government done enough? And from your standpoint, I mean, obviously everybody has a view. Economists have said it's not enough. Business people want more. Those looking at migrants walking on the highways feel differently. From your standpoint, what's been done and what you think could be done more? More could be done.
It's a pleasure to be on this chat with both of you. Let me say right in the beginning, before we get into the details, you have to understand the wider context in which we are taking decisions. And the context is the following, which is that we are having to take decisions, major decisions, in an environment where there is enormous amounts of uncertainty, where there is risk of all kinds of unintended consequences, and where we do not exactly know how the rest of the world is also. So it's not just within India, but the outside context, the demand for exports, oil prices, and so on. So this is the context in which we are taking decisions, whether it's on the health front or on the economic front. So how does one go about it? Well, one strategy is to do something called a barbell strategy. Those in financial markets will know this. The barbell strategy is you hedge for the very worst, and then for the rest of it, you basically respond step by step through feedback. So on the health front, we did exactly that. You do a full lockdown while you get your testing in place, work out what is happening, and so on. And then step by step, you ease it. You're not easing it because, infection rates have fallen. Far from it. We have more infected people today than we had in the beginning. But we have a much better idea of the nature of the disease. We know where it is, what to do about it, testing for it. We have got beds ready for it, and so on. So this is how we are going about in the barbell strategy works on the health front. Now we are doing something very similar on the economic front as well. What is the barbell strategy there? Well, first of all, you've got to hedge and make sure that the very poorest people have some food on their plate. They've got some money sent through direct transfers to them. This is not going to solve poverty. This is merely to keep them, sustain them. Where possible, where you need more food grains provided, ration shops, and so on, the state government needs to do some things. So that is what is done. Next, you need to also make sure that the financial system and particularly the business sector of the lower size, which is the MSMEs, they stay alive. This is very critical. Again, keep them alive through the cycle. This is not reflation of demand, because you can't reflate demand under a lockdown. It's no point. You're basically doing a barbell strategy and keeping them alive. Meanwhile, you put in place for the future supply side things that in the future it takes time to do supply side things. So you get that process in place so that in the future you can begin to build on that. So now that I've given you the context of a barbell strategy, now look at what we are doing. Right in the beginning, if you remember, we did the first thing the finance minister did was she pushed back all the finance related deadlines. She made sure some money was transferred through and some food was made available. Over time, we have made more food available. As migrations began to go back to the villages, we ramped up on the Manrega side. Meanwhile, we are using everything we can to keep the MSME sector in particular alive. We are trying to encourage industry in general to pay salaries as long as they can. We know that it becomes difficult with time. But we are not claiming that this is going to lead to a dramatic expansion of the economy. No. We expect this to keep us through this cycle going while we create supply side openings on the other side. And we are now, as you will have seen in the last section, we are beginning to put through major supply side reforms. We, as you know, have begun to open up the agriculture sector and basically getting rid of Inspector Raj and the License Permit Raj with removal of the Essential Commodities Act. The APMC Acts on the ground are getting reformed already. Similar thing, for the first time, very unapologetically put forward a framework for privatization. We will privatize things that are not in the non-strategic, but on the strategic front, we will retain some. So there's a clear framework for that. Similar things are being done on the labor front. 44 laws being made into 4, but at the state level, you're beginning to see some of the states doing reforms and so on. Mineral reforms and so on. So here we are doing that. Meanwhile, what are we doing? We did this huge 100% guarantee for all new loans up to 20% more of sanctioned loans for the MSME sector. 100% guarantee by the government for 3 lakh crore worth of loans. We also know that the NBFCs are having terrible time raising money and many of them will go bust if they cannot roll over. So we created a buyer of last resort as an SPV, put 30,000 crores into that, backed again 100% guarantee by the government, and so on and so forth. So what are we doing? We're basically smoothing and lubricating this phase of the lockdown. We are unlocking, we are getting some demand coming back in, and we are opening up on the other side spaces using the supply side. Now, this does not mean that we will not do more. I think the finance minister has been very clear that on the other side of this, we still have ammunition. We have some fiscal ammunition left. We have not used all of it up. And we have lots of monetary ammunition. Indian interest rates are still way higher than world interest rates, and we can bring them down. So there is a lot of ammunition in there, and we will use it. So if you now get a sense of how we are doing it, barbell strategy, feedback loop, and then step by step moving ahead. That is basically what we are doing.
Well, Sanjeev, I must say that you did a much better job of presenting what the government has done than the government did for the last 10 days or so. I think this is far more cogent and far more nuanced in your and I do hope that you somehow managed to sort of design this articulation one more time for a larger audience, maybe on national television, because there is a certain coherence to it, a certain sequencing to it. Having said that, and I will come back to the supply side reforms, but the primary thing that you hear in Mumbai and you hear from business folks is that the government's hands are tied down by a pre-existing condition, comorbidity, which is basically 8 quarters of slower growth.
You'll have to be a little bit louder.
I said the buzz in the business folks and among economists and people who are concerned about the quantum and the quality of this package wonder whether the government's hands are tied down by a fear of ratings, downgrade. Is it because of the existing condition or comorbidity of an existing slowdown? What is it that constrained the government most? And do you have headroom when you say that on the other side of the lockdown, we don't really know what the other side looks like anymore, but on the other side of the lockdown, do we have elbow room, headroom to do the things that we need to do?
So the answer to that question is whether you believe this is a sprint or this is a marathon. We have taken, for a variety of reasons, the call that this is a marathon. So we are not using up all our ammunition. We have been very careful about it. Other countries may have gone for the big bang approach. And I have said this, by the way, many times on national television, that we are not going for a big bang approach. We are going for a much more calibrated approach, deliberately, because we expect this to be a marathon. Now comes the issue of how do we go about it? Now, it's always very easy to spend taxpayers' money. So clearly, that's not a constraint. You have to discipline yourself because if we are in it for the long run, we have to do this step by step. Is it the case we are being constrained by, let's say, a fear of downgrades? Well, you know, in a world where everybody is getting downgraded, the fear gets diluted because there is company in misery. So that may not have today the kind of currency that may have in normal times. And I think even the rating agencies appreciate that we are being very, very systematic about this. So the question is, how much space do we have? Not whether or not we are not using it because of fear of some other reasons. So let me here go through it systematically. I've said before, and I'm saying it again, we have a lot more space on the credit and monetary side than we have on the fiscal side. Why do I say this? First of all, look at the credit side. The banks have actually parked, as we speak, something like 8 lakh crores with the central bank, where they're earning a reverse repo rate of 3.75%. Clearly, this is money they should be drawing down and spending. And by the way, when they draw it down, they will be actually creating high-powered money. It's not M3 they'll be creating. They'll be creating reserve money. So that will multiply through to being a very powerful impact on the thing. So you really do want to encourage them to draw down this money and lend again. So by the way, that correlates on the other side with the guarantee scheme that we also do. So that's part of our encouragement to draw it down. It's not just about the first round of impact from drawing it down, but the multiplier effect of that through the economy that will happen. So that's one. Second thing, there are other things as well. In a world where you have basically zero interest rates in most of the world now, even countries that very recently were going bankrupt in Southern Europe are raising money at 2%. The ones in Northern Europe are raising it at negative rates. Even Britain, with all kinds of issues related to Brexit, it's no longer being a part of and all kinds of other issues. Of course, not to mention the fact that it has been very badly hit by COVID itself, is, as of yesterday, borrowing at negative interest rates. In this environment, the government of India is raising money at 6%. So very recently, the Kerala government raised money at almost 9%. So clearly there is a scope for lowering interest rates very, very significantly here because there is no threat to this at multiple levels. Global liquidity is going to be easy for a long time. There is no inflation anywhere on the planet. Not only is oil prices low, even domestically, by the way, we have a problem currently with measuring inflation because of the disruption, but every indicator will be low. I mean, real estate prices are down 15, 20% in most places from a year ago. I mean, something in those range, at least 10%. There's, cement, many of the numbers will be down. Food prices here and there may have been affected by some supply disruption, but as soon as we open up, they'll also decline. So there's no inflation in the system for a long time to come as well. Inflation, not a problem. The exchange rate is also not a problem. Many people say, oh, you reduce interest rates, exchange rate will be a problem. How will it be a problem? The exchange rate is a relative measure. It's not an absolute measure. So there's nothing that is happening to India or the rupee that is worse than what is happening to all the currencies against which we are measured. Maybe there may be a short-term flight to safety kind of thing. That period is already gone. The rupee is actually stable and we are accumulating reserves as we speak. So there is no reason we cannot reduce interest rates very, very significantly right now.
Sanjeev, you have put it very wisely, the whole thing. But the question is, there are two questions. I am taking forward from what Shankar said in the beginning about you are worried about ratings. But you are talking ratings, we are not worrying because there is nothing happening worldwide. Everybody's ratings are going down. But as I'm sure that you will be getting the feedback from stakeholders, also from various sources. But I can give you feedback. Rating agencies are asking for the balance sheet of the last quarter from everybody. And the last quarter is going to be the worst in many decades. If the ratings are done on the basis of the last balance sheet, all the companies go down from 000 to 2 and 2 to 1, 1 to 0. Are you prepared that kind of ratings? Have you told the rating agencies to ignore these ratings which are going to come up in the month of June?
So obviously there will be some downgrades. There are, by the way, two parts to this. One is on the sovereign, but there is an issue also domestically that many ratings will be lowered for many companies. Here, of course, there is an issue here which we need to have a discussion about. That if we were just reducing ratings generally and everybody's ratings went down a notch, then how does it matter?
If it matters, Sanjeev, because banks will be charging more interest rates.
No. So
if the rating goes down, they will give you.
No, it doesn't matter. No. So here, this is the issue. Normally, it would not have mattered. But, and this is where we have to think through the problem that we have globally. By the way, this is a problem, not an Indian problem, but a global problem. That globally over the last 15, 20 years, what has happened is that ratings have got hardwired into regulation as a result of Basel II and then Basel III. And as a result, what has happened is that the capital that is kept aside is based on your ratings. So every bank has to keep aside capital based on risk weightings, which are related to ratings. Now, worldwide, as you are lower the ratings, banks will have to act pro-cyclically to keep aside capital just at a time when you should be expanding. Now, this is a fundamental problem. Worldwide will be faced. We will also face it as the ratings are come down. And this is one of the reasons we have also taken the particular peculiar route we have, which is to provide a sovereign guarantee to this monies that we are giving out to the SMEs, because that money effectively is a sovereign guarantee. In other words, the banks can do this lending with zero risk capital. So you have to understand that all of these things, when we did these measures, they were all feeding into each other.
No, Sanjay, it sounds very good, but I have asked the very question. When the rating of a company goes down, banks are going to charge higher interest rate. Have you taken that into account? Or are you assuming it's worldwide is going to happen, therefore let it happen in India also? But how will the companies pick up then if they have to pay a higher interest at that particular point in time? Then how the whole economics of that business works?
So that is not how. So obviously, what is an interest rate? It is the price of money at a point in time, right?
Yeah,
the
correct.
Money includes in it various things: a time preference for money. It includes in it a sense of what the sovereign is plus a spread over it, right? Now the spread in its
I'm looking at a person, ordinary businessman who may be watching. He may not be understanding. You can understand economics.
Let me explain.
If somebody after he's getting loan out at 9%, after the first quarter balance sheet comes out, he will be charged at 10%. You may have given the sovereign guarantee, but that 1% will be added to its cost of production.
That is the point I'm making to you. You can't. So, for example, let's say there is a bond for say 10%. Okay. Now, a bond at 10% means usually that there is a sovereign which is at 6% for 10 years. Let's use that as the benchmark. And there is a 4% spread over it. That's how you arrive at 10%. How are you arriving at 10%? You're arriving at a sovereign plus a spread. That's how all interest rates are being calculated. Now, there are two parts to this. One is that the sovereign interest rate itself needs to be lower. The point I was making, that the 6% itself should not be at 6%. It should be, in fact, with the reverse repo rate at 3.75, we should be at about 5% for the 10-year rate. Since I've spent 20 years in bond markets, that's about the correct rate. Okay, so that itself means that even with the current spread, interest rate should, for the borrower at the end, which was at 10, should fall to 9. Okay, that's step one. Step two, what do you do about the spread? Because obviously there is a risk element that has now emerged from this. So that risk element has to be mitigated in various ways. So one way of mitigating it is that you provide a sovereign guarantee to that risk. So then that also comes down to whatever degree. Alternatively, you find buyers of last resort for that bond. For example, that is one of the things we have done with this SPV that we have just announced, which you may hear the special scheme for buying NBFC bonds and so on. So basically you use liquidity on one side and lower the base interest rate. By the way, I'm not telling you anything that other parts of the world are not doing. So for example, let me use what the US Fed is doing. The US Fed has just introduced about 3 weeks ago a program saying that we will go out there and buy corporate bonds. Now, why are they doing this? For exactly the problem that I have put it out. Now, their own interest rates have fallen to zero. So their sovereign has gone down to basically 0.6 now. So that part of the interest rate has fallen a long way. In Germany, it's in negative rates. On top of that, there is a spread. That spread is being brought down by the Fed directly buying junk bonds even, but corporate bonds in general, but even junk bonds. You may have heard about this program.
Yeah.
Now, why are they doing this? Is precisely they are squeezing down the spread as much as they can. Now, it turns out that just like with the RBI, the US Fed's Act does not allow it to buy corporate paper. So what do? They have now created an SPV, which is run by, I think, BlackRock, where they will put the money in and they will buy the bonds on the Fed's behalf. Now, India also, the RBI cannot directly do it. Hence, what we do, we created an SPV, which we are in the process of doing. Only yesterday that got approved by the cabinet. Now we will put in some capital. Then the central bank, our central bank, Reserve Bank, will put 30,000 crores in there. This 30,000 crores can be used to buy bonds in the market. So that is one way. I'm just giving you various ways in which the spread is brought down. So what are we essentially trying to do? We are trying to essentially lower the temperature in the system by putting in liquidity and lowering the sovereign. Now, what I'm trying to say to you is, we in India, unlike many other countries, have a long way that we can lower the temperature because our temperature is too high. So we have lots of space of lowering it. Now, it has to be done carefully, but typically why can we not just do it all the time? The reason you cannot do it just all the time is because if you did it in a time where demand is very high, you will stoke inflation immediately.
Sanjeev, there's no demand at the moment, as you rightly pointed out. But the question of going back to it, you have given so many packages now.
So
but I just want to ask a very specific question as a layman, as a person who's watching and talking to various people. After so many packages you announced in Power Fed,
yes.
I've forgotten the number of counts. I can't do how many packages you announced. It runs into because when Prime Minister spoke, he spoke with clarity. His messaging was very correct. He said 20 lakh crore, wow. But when it started waking up, people went to sleep after that. This is the feedback we are getting, rightly or wrongly or not. But I want to ask you why there is not a feel-good factor in the economy yet. After so much of being done by the government, which you have explained very wisely. A person like me or anybody you talk to, we don't feel good in this country at the moment. Everybody is trying to decipher what you mean by this package.
Let me say
and the Prime Minister is very clear.
So let me be clear that nobody in any country is likely to feel good till the lockdown ends and we can get back to business. So I can assure you
when Trump sent $12,000 or $2,000 to $1,200 in the pocket, they feel good.
I don't know. Shankar is in the US. Are people jumping in?
He's in Toronto.
Are people, Shonak in the UK announced a very large packet. Are people jumping with joy in the UK? They are not. This is a difficult time for everybody in the world. And we have to understand that this is not a sprint. We have to be willing to do this. By the way, we will have to do more in the future as well. When we go into the rebuild phase, we are right now in the stabilization phase. When we go into the rebuild phase, we will have to put in more packages, more supply side measures you can expect. And by the way, in every step, people say, oh, they only count that little bit that happens to be a direct spend from the budget. So everybody is, oh, you've only done 1.4% of GDP or,
there is another confusion there also.
Yeah. Thinking about it, because first of all, every other country also includes their monetary and credit stimulus. Government guarantees are a very important part of that stimulus in every country, so are they in ours. And in our case, because we have the monetary space, we will use more monetary space.
Just to continue on the issue of systemic stability. I mean, a lot of these measures are about systemic stability, about preventing mass bankruptcies and banks from collapsing, the banking system. The issue of rating also has another angle, that Indian corporates have large outstandings in the external commercial market. And the Mumbai buzz, I'm saying specifically, is that a sovereign downgrade would is most feared by all those people who have the large exposures in the ECB market. And the conspiracy theorists, of course, would have it that a lot of these people have strong influence over policy making. Now, that I'm not expecting you to say one way or the other on the issue of the conspiracy theory, but is India prepared to deal with what could happen if the sovereign rating is that? And because the ECB exposures are high, the companies are under lockdown, their ability to service those loans is already an issue. The second question, in the large part of all the packages that were, one didn't see any help to the state governments. Now, you mentioned how Kerala had to borrow at 9%. It strikes me as kind of, or at least it's intriguing, that why wouldn't the government of India, which has a sovereign rate, which gets a sovereign rate of around 6%, not borrow that money and give it to Kerala instead of asking Kerala to borrow at 9%? Isn't that uneconomical or suboptimal in a way to deal with? Eventually it's public finance, eventually the rating agencies are going to count, or whoever is lending money is going to look at the entire public debt picture, not just what the central government is borrowing.
So there are separate issues here. One is relating to the conspiracy theory you put together. And the other thing is, why doesn't the government of India borrow on behalf of the government and just pass it on to the states? So there are two somewhat separate questions. Now, as far as the sovereign, as far as the conspiracy theory, I presume what you're saying is, the theory is that the government is being so constrained by sovereign ratings and therefore is not spending enough, presumably because that would somehow throw our sovereign ratings off kilter and cause all these other problems for retail.
Collateral damage.
Let me say that's ridiculous for a very simple reason. You see, there is a certain sweet spot. Okay? If you spend too much, obviously that's a problem with sovereign ratings. In fact, it will lead to all kinds of other problems spiraling out. But it is also the case that you spend too little, then the economy will be slower than it would be growing, and it would feed back to lower revenues and so on. So it is not as if simply being very constrained leads to better fiscal management. Because there is a feedback from revenues to growth, the denominator grows slower, your revenue numerator also grows slower. So simply being fiscally more and more conservative does not actually constrain your debt to GDP trajectory either. There is a certain sweet spot. And of course, in a disrupted situation like this, figuring out that sweet spot is not easy. But nevertheless, it is the case that there is a sweet spot. So, and that sweet spot allows for a significant amount of spending and monetization if necessary. So it is not the case that that is what constrains us. What constrains us is that we would like to do this in a disciplined way. And two, we do not think that only a fiscal spend of the kind certain people want is the only way to stimulate or stabilize the economy. As I said, the monetary tools are important, guarantees are important, and by the way, guarantees are ultimately also a fiscal tool. You have to ultimately pay out whatever goes wrong that you have guaranteed if they go wrong. So these are fiscal tools. So we are using them. So that is one important thing. We have to be systematic about this, and I'm repeating this. This is a marathon. It will last at least in months. So we have to have significant amount of ammunition dry for this. And we have space to do it as well. As I keep telling you, we have monetary space. We also have some fiscal space, and we'll use it. We'll also use the supply side actively. Now comes the issue is about state and central government. Now, this is how it is done for a long, long time. It's not an abnormal thing for states to be borrowing on their own account. They have their own borrowings. That borrowing happens on a somewhat of a spread over the sovereign. That is normal as well. This is the correct way to do it because it is one way in which the states are individually encouraged to be fiscally prudent. So there is a government of India interest rate, and then there is a spread over it. That's how it remains. Kerala.
Okay, Sanjeev, let me just interrupt you there. So the fact that the state of Kerala has to borrow has something to do with the abnormal times that we live in the
In normal
so,
times, it would have a spread.
Yeah.
So
Normal times you would have a spread.
now it happened
Normal
to be
times the
bounced.
allocations. No, let me finish. The allocations would flow. Now there is a gap in the collection of revenues, and therefore there is, let's say, the pipeline is constrained on the distribution of revenues. Although Somnathan has said that 110%, the states of revenue has been passed on to the states. Fact is that states which have been grinding their teeth over transfer of resources from center to states and how much is pending, it's a perpetual issue. The point that I'm making is that the state is now being forced to borrow for no fault of its own. Not that it managed its fisc worse or better.
I understand that the states have a difficulty, which is why we have done several things very recently, by the way, during the announcements that the Honorable Finance Minister made. She announced several things which are very important. So let me go through them. First of all, we have not been making the transfers as share of taxes and revenues in accordance to how much revenues are coming to us. Our revenues are also stalled, remember?
Yeah.
But we are doing it according to what was budgeted. So in that sense, we are, after all, we also have to borrow. So in that indirect sense, we are borrowing that on the state's behalf in this sense. And we are passing it on according to their shares of what it would have been if it had been if it had followed the budgeted trajectory. So that is one bunch of money that the Revenue Secretary or Expenditure Secretary, which you also mentioned, had talked about. That money is being transferred. This is just being done as, just last few days. Then we have also opened up the borrowing limits. So they are allowed, usually they're allowed to borrow, I think, if I am not mistaken, up to 3%. We have allowed them up to 5%. So that also of their state GDPs. So that also opens up some space for them to borrow, right? Now that gives them some space. By the way, they also, one of the things to remember, they have some cash balances they haven't drawn down. So it is not the case that they're coming to the market because they've drawn down all the cash balances. Many of them do have cash balances to do as well. However, there has to also be active management of the bond market at this point in time. Some of the liquidity tightness has to be managed very, very actively. And that may require managing the liquidity in the system. It may require thinking through the yield curve and actively managing that. And the Reserve Bank, by the way, has many tools to be able to do that.
Sanjeev, other question, because we are getting into bonds and everything, but I am as an ordinary layman person want to ask, how money will come into my hand directly to spend more and create a demand? The question is, there is a controversy about 20 lakh crore rupees also. Political messaging was correct. It seems bureaucratic messaging was a little messed up. This is what the impression is. Let me complete, please. So there may be some understanding of the ordinary people wants to understand it in simple language, not in a jargon which we know and you know, and the rating agencies may know. But I'm talking about the person who's walking on the road and the person who's selling on the street. So they must understand that government is doing for something else. That 20 lakh rupees is the 10% what the Prime Minister said in his speech. But the question is it something outside the budgeted estimates or is it over and above something? I can't figure out. Because your budget was about 20 lakh crore rupees, 2 lakh 10,000 crore rupees, whatever. So your budget will constant because the income will go down in 3 months. You won't have that kind of estimate budget. So what will end up ultimately? It won't be 20 lakh.
So the point here is that I don't think the Prime Minister said this, nor did the Finance Minister say that 20 lakh crores is being divided up and directly being transferred to everybody's pocket.
We did it. Channels did it, of course.
I don't know. Maybe somebody did. I don't think any responsible channel said it. And I don't think people understood it in that way either. The key thing was...
That's precisely the part. I'm raising the question. People don't understand.
He made it very clear that it was a mix of various measures, which involved some transfers, but to a most extent, it requires, by the way, even if we simply did a transfer, it wouldn't help the economy in the way people may imagine that would be a great way to trigger demand. It wouldn't. Because at the end of the day, simply putting money into one part of the economy without keeping the rest of it alive is no use. You have to spread it through the whole economy. An economy is a complex system with various things feeding various other things. So you have to keep, for example, industry alive, particularly small and medium industry. Because if you just do a one-time transfer, but you don't have this part of the economy alive, then people will lose their jobs, and this transfer you just did won't lead to anything, because you just, in fact, most people will just save that money and won't even spend it. So you won't even get the demand flow through from it, because people will just do precautionary savings. So you have to invest it in different ways so that the overall system keeps the money, the cash flow of the system keeps churning. And the cash flow of the system, to keep it churning, we put it into different parts. So we know that migrants are going home, so they need, you need to extend and open up the Manrega. So we have expanded that, 40,000 crores for that. We know that there are migrants stuck in cities. Many of them don't have ration cards. There's no point in putting more rations or even doing Jan Dhan account, because their Jan Dhan account may be in their village or they don't have. So how do we do? So some food is directly being made available to them in the cities. Then we know that people are moving around. Maybe we don't like that happening, but people are migrating on foot back to their villages. So railways has opened up Shramik trains, as you know, and the central government is paying 85% of it, of the cost, and 15% is being asked from those states that are asking for it. So these trains were being organized. So in various ways, you have to do targeted spending to keep the whole machinery running through this. Simply, even if we did a full 20 lakh crore transfer to everybody's pocket, there'll be large numbers of people who, for a variety of reasons, will not get that money. Secondly, large parts of your industry will just break down. In fact, you won't even spend the money because the people are losing their jobs. So you have to keep this cash flow of the system, spread it around in a way, and at the same time, maintain enough ammunition that if you have to do more of these, do it in the future as well.
There is another criticism which I've read in the newspaper, that you're not given enough attention to real estate, which is in trouble, civil aviation and hospitality industry, who are the basically backbone of the service sector, and middle class particularly hasn't got anything in terms of reduction in tax rate, because you have postponed their liability by professional, by reduce their TDS. So why these three sectors have not been, they are not visible, they may be hidden somewhere, their benefits, I don't know. If you can tell us that why these sectors are not visibly given something which can pull them out of the mess they have got in.
So you raised a very important issue. For example, there are sectors like tourism and so on, travel, restaurants and things like that, which have been—
and media.
And media maybe, which have been severely affected. But media is somewhat different from the point I'm going to make now. Now, many of these sectors are essentially shut down. If we did, let's say that we gave a large amount of tax rebates to tourism, what would be the benefit of that? Nothing much. I don't know anybody who is not traveling right now because of high GST on their sector, right? On the hotels or restaurants. They are all shut down. Even if you open them, not many people are going to rush to go back into them. So there the problem is to simply keep them going through this cycle. The generic benefits we have provided in terms of liquidity to MSMEs, making sure that the insolvency and bankruptcy code is not applied for a full year. These are actually applicable to these people as well. But providing a specialized one, because after all, I can't force people to, tourists to go out there right now. In fact, I don't want them to do that. So what's the point of my giving out a major tax rebate to the travel and restaurant business when all their restaurants are shut? So we have to be very careful about what exactly we are providing at which point in the cycle. Maybe at a future date it may work. Maybe there are other things we can do for them. So right now what we have to do is what we have to do for everybody else, which is make sure that you do not have a cascade of defaults through the system. And that is what—
Sanjeev, the state government, for example, they are getting, consumers are having a double whammy kind of thing. You are getting VAT, which is being increased. All the state governments are putting more on liquor, on real estate, and every other petrol, for example, you have raised the excise duty, but consumers are not being central government excise, but state government has raised it. The question is, what you are saying is rightly that how we manage these kind of, but question, you could have reduced GST across the board. This could have helped anybody else.
By the way, let's say
that is what the industry is saying. I'm not saying that this is right or wrong. I'm not passing any judgment.
So we will consider these at different points, what will be the best use of resources. Remember, in the end, even if we do have resources, they are still limited. So we have to ultimately judiciously use these resources Even if there were no sovereign ratings agencies to worry about, we still have to be judicious about it. There are limited resources. In the end, once we open things up, we will ultimately have to pay back the debt. We will ultimately have to think about these things. So we are careful about spending taxpayers' money. It's very easy to simply go out upfront and begin spending it, and for a short while be very popular. And other countries will those who have gone for the Big Bang are already discovering it. Many people are no longer remembering some of the Big Bang things that were done not just a few weeks back. And so there is no point in doing many of these things that, these things right now when you're under lockdown, because we have literally shut down the economy. That is for a good reasons, by the way. And we are now beginning to open them up. Let's open them up. There will be some demand that will, by the way, come back as a result of just opening things up. Now, once we have reached the situation where we open things up, a demand stimulus has some impact because the supply side is in a position to do something with it. Providing a demand stimulus in a time shut down is no use.
We read in the newspaper that investors got...
Except to the extent that it is targeted to people who are in dire need. Food, for example, that totally. We have opened up our granaries. By the way, the central government has opened up its granaries wherever possible. State governments need food. They are very free to come and ask for it. And I think this point has been made by Finance Minister over and over again. And of course, direct transfers have happened. If necessary, we are willing to do more. By the way, this government is the one that created the entire architecture to be able to do this through DBT. Aadhaar, the Jan-Dhan accounts and mobile, the JAM Trinity was created by this. So we are more than aware of the use for this. We have used it in the very recent past in this episode. If necessary, we will do more. And we are doing other things as well. EPF, for example, the government is directly paying EPF for the formal sector. So there are many areas where we are putting money in there. But to ask us to do things which have no real great impact is pointless. I mean, giving a tax holiday to hotels is no use. Nobody's going to visit hotels right now because we are in lockdown.
The tax holiday is not the hotel, to the entire country as a whole. Middle class has not got anything. I'm not talking about this, because unless you revive real estate, you revive tourism.
I would also like to remind everybody who's asking for it that remember, you and your children will have to pay back the debts for it. And you'll have to pay back quite a lot.
We don't know about the long term anyway. But here's the thing. You mentioned about the Jan-Dhan accounts and the JAM Trinity basically transfer. I've done some amount of work on Aadhaar and direct benefit transfers. I was kind of surprised to hear the government say yesterday that, direct transfers are easy on paper, but difficult to implement. It kind of struck me that on one hand, the government has been saying for 5 years that, we are doing transfer. And I know it for a fact that at least 300 million people are on the direct benefit transfer system, whether it is LPG subsidies, whether it is pensions, whether it is scholarships, whether it is old age stuff. So I was quite struck. Is it that the government, so it brings us back to the visuals of the migrants on, because the question came in the context of why we couldn't transfer money directly to the migrants while they were struggling or where they were stranded. How does one read the two contrary positions of this? For at least 5 years, and I've been witness that the government has used the direct benefit transfer quite successfully. And B, the government saying yesterday, specifically the expenditure secretary saying that direct benefit transfers are easy to...
I think you're misreading what he said. So let me explain it on his behalf. Mm-hmm. This JAM Trinity and the Jan-Dhan system is extraordinary. It deals with hundreds of millions of people, right? You yourself said...
I think we are at the forefront. I mean, we are really the cutting edge pioneers of this system.
And we have used it. Even in this episode, we have used it. It was one of the first things we thought of using, and if necessary, we'll use more of it. But we have to also require hundreds of thousands of people does not mean every single 1.3 billion people. Especially people who are, for example, on the road in the migration process. It may not be able to reach them There may be people who fall between the cracks for a variety of reasons. It may be they have left their account back in their village when they came and got stuck in the city they had migrated to. And their ration card, for example, may not be working. So therefore, simply to rely on this one tool, which may be a very good tool, by the way, and dealing with, it may be covering a very large proportion of India's population, still means that there will be some significant number of people, because numbers in India will run into millions, even if it's a tiny proportion, it will still run into millions. And by the way, if you want to talk about the large numbers of people migrating back, you know, in proportion of the people who have stayed back, both in the villages and in the cities, it's still a very small proportion.
Yeah, it's only 10%.
Yeah. So there are still people we have to then, so what the expenditure secretary basically is saying, that for those people who are falling between the cracks, they've fallen between the cracks for a variety of reasons. And in the long run, we'll deal with them with one nation, one ration card and all that. And by the way, Finance Minister has said that by March, we'll get everybody have one nation, one ration card. But right now, they're on the road. So using, say, I transfer money through Jan Dhan to this person. Is it immediately benefiting that person? Perhaps not. So there are other things we have to use in order to reach out to this group of people. So that is the context in which you have to get the trains. You know, the railway minister has talked about getting the trains going. This is where you talk about getting food to them. Wherever you can lift food, please pick it up, and so on. And of course, by the way, it's not just the central government. The state governments are doing various things, and some have done more than others. But a lot of things are being done at the state government level. Please talk to them. It's in many ways, managing this gap group is very often the state government is much better positioned to deal with them than we are sitting here looking at it from North Block.
Sanjeev, I have a couple of questions from our viewers who are watching from all over, even one from Washington. I have got the question as well. Before that, we were talking about railways, you're talking about everything else. And one of our programs, Ajay Singh, the chairman of SpiceJet, said that they offered 600 aircraft to fly the migrant labor back to their houses. And at the same rate, almost which you are paying to the railways. He didn't mention that, but I'm interpreting that. You know, why did you use that? Because that could have provided infection, that could have faster movement. 5 lakh people would have been moved daily basis by them. You are still struggling, saying people are fighting the road, labor is walking. Same money you could have used that. I hope you are aware of that proposal or not. I don't know.
So of course we want people to move back where they have to. But it's not something that we want to do as an encouragement, in the sense that after all, we have a lockdown there for a reason.
You're sending by train, you could have sent by flight also, no?
So wait, so you want to do it in a calibrated way. This has to be done because remember, we also have to make arrangements where they reach their villages, because in the villages, they have to be quarantined. Many of the states, by the way, are carrying out all kinds of quarantines on the other side.
Protocol could have been applied on railway passengers, could have applied on civil aviation also.
It's not the case. I don't know what the deal that SpiceJet provided, but I'm sure
not SpiceJet, all the airlines, not all the airlines.
In that case, we would have also had to pay them as well. So we have railways, by the way, to do it much more cheaply.
But people are working the road. Anyway, we will not get into that argument now. Let me ask the question which I am getting from the
There was some element that we would have to pay. So we have the railways to do it as well. But we have to make sure that we have certain amount of capacity by which we have to judge before they get into whatever transport they are on.
And there must have been some considered decision must have been taken. I concede that point.
The temperature is taken. We have to make some basic check on their symptoms, so that the last thing we want is large-scale migration of COVID patients all over the country. So certain amount of checking has to be done. Even, by the way, as we go into this opening up phase next week in the airlines, we'll have to have protocols. So it requires time to put through protocols. We appreciate the support that everybody has given us at every level, by the way, NGOs, state governments, local governments, and it has to be done in a calibrated way. It's very good to think about this as a one step. We move, here is the solution and immediately it gets implemented. No. It requires a calibrated effect. If we had in fact done that, and we had now had, more than half of the districts in this country do not have cases. That's why we have been able to open up these districts. Now, supposing we had gone and allowed everybody to go in a completely uncalibrated way, then we would have had to keep the whole country under lockdown forever.
Sanjeev, I won't go into this because I assume the calibrated way would have been used for aviation also, because we are flying people, they would have gone to the same formality. Anyway, let us not get into that. I've got questions because time is very long already. One of the questions, of course, has come from one of the partners of the show from Cuttack, Anand Podar. He's a partner here. His question is very basic, which is talking about trust is the basis of all relationships and business is part of it. Post-COVID, the trust factor is lost. What steps should be taken to restore the trust factor as it was before COVID? How is the government going to help for the same?
You're absolutely right. Trust is a very important part, but trust in what? You have to see that neither the government nor the citizens of the country nor the businesses are the source of this problem. This is a global problem that landed on us, as indeed we now have this cyclone. So, what is there to distrust? It is not the case that we have imposed this as a government on the country. It is not the case that, suddenly consumers have become distrustful of business. We are all in this together as a society. We opted to do what we had to do. This lockdown is not fun for anybody here. It is.
I remember that he must be talking about you don't have a trust in businessmen. A lot of other messages here not clarified, so I can't get it.
This is something I think is the wrong way to think about this. We are in it together. Believe me, we in the government are not enjoying this any more than the businessmen who are running this business. I am working weekends. I am working long hours. I am reaching out to the public through people like you. Long hours sitting and explaining these ideas. We cannot lose trust in ourselves, not as a society, not in government.
There's a question from one World Bank also now. You got a question from a World Bank person also.
I will answer that because this is first and foremost about us as Indians. We have
sorry.
By the way, we also have a very serious situation right now in Bengal, thanks to the super cyclone we just went through. So we are facing many, many things, and who knows what 2020 has in store for us.
Correct.
So we cannot suddenly lose trust in ourselves as a society. Our social capital is the most important thing, even more important than the administrative capital. Secondly, difficult as this has been, 1.3 billion people, despite all the other various things that may have gone wrong in the edges, 1.3 billion people have been in lockdown now for 2 months without any real breakdown in the system. I mean, my heart goes out to them who maybe have been on the roads and migrating back. But as a society, we have taken this very difficult things. This is a society that has been kept alive essentially by our Kirana store owners. Essentially, we have all basically been fed by our Kirana store owners. We have been kept, law and order has been kept going by the policeman who has been there, the bureaucrat who in other times we may curse them all the time. He has kept things going somehow.
There is a message here. It means the e-commerce company will not take away the Kirana store.
Who is paying his salaries to his staff, even though he knows he has zero revenues. So let us give some credit to ourselves as a country and say trust has not broken down.
Correct.
Through this. So please don't say the trust is broken. It is not broken down.
Sanjay, that means Kirana owners which are being threatened by e-commerce big companies, you will take that sentiment to mind when you're having policy in future about e-commerce. Because that's the one that
I have, by the way, publicly
into retail, you will not allow any big companies to come and close them down.
I've talked about this many times. I publicly said this. The most important guy who's kept us alive through this whole thing is the Kirana shops.
There's a question now from Abhishek Saurav, economist, World Bank, Washington. He says, would invite the panel's view on reshaping of the global value chains due to the pandemic. Specifically, what can we say about implications for global trade and investment flows? This is an area of high policy relevance that multilaterals are focusing on. The negative demand and supply shocks are affecting employment and wages, with impacts more severe for women because they have more temporary employment contracts, and smaller businesses because they have lower access to financial resources. Would be the good to have your views on how policy responses to the pandemic are taking such systemic differences into account.
So the key thing to remember here is that this shock to COVID is not just a shock, like even the 2008 shock was a small shock compared to this. We have to think about this as a once in multiple generations kind of shock. The kind of rewiring of the world economy that happened after the Great Depression and the Second World War, and the creation of, the various institutions that came about, including the World Bank and the Bretton Woods institutions, the architecture of the UN, and basically the architecture of the world that was set up in the late 40s is the one that has kept us going till this point. But we are now going through a rewiring of this at multiple levels. There is, of course, this whole questioning of the multilateral architecture, which, of course, the US is very much questioning it. And I'm not going to get into that. So the question here is about the supply chain architecture. And there is no question that the supply chain architecture is going to rewire. It's not just about people moving out of China. There is a much deeper and more complex things that are going to happen. And India must be an important part of whatever that new supply chain architecture that emerges out of this. There's no question about it. Atmanirbhar Bharat, let me clarify, is not about going back to import substitution of the Nehruvian era or the license permit Raj of the Nehruvian era. This is very much about participating from taking a very, making sure that Indian interests are looked after, but participating in global supply chains, which we know are going to change. One of the most important elements in that has got to be that we have to have a flexible factor market in order to be able to take advantage of this. Whatever happens.
There's a question from your city, Calcutta. Siddharth is asking,
so
can you please
finish this thought? So therefore, if we are talking about reliquefying supply chains, we have to respond to it with factor markets being flexible. Hence, labor market reforms, hence all the other things that we talked about in terms of reforming agriculture. But one reform that will be necessary for all of this, by the way, the biggest reform that we will need in this has got to be about the legal system. Because this, whatever the new architecture is about enforcement of new contracts.
Shankar, let me finish the question, then you can ask your last question.
Yeah.
There's a question from Siddharth.
I'll just connect it to what Sanjeev was saying about the factor market reforms and all
that. You can ask him the question, Shankar, then you can take over completely from there. There's a question from Siddharth from Calcutta. Can you ask Mr. Sanyal as to why no interest waiver for the last 3 months is being provided to MSME instead of just a moratorium or a deferment?
So first of all, I think the key thing is that the banks have to be gotten to lend again. So only then can we have a conversation about interest rate waivers and other things. And remember, there is a price to be paid about each one of these things. The banks, if they simply waive off things, we have provided a moratorium, but remember, banks have to pay out interest to their depositors. So are we talking about a moratorium for depositors, pensioners, and as well? So be very careful about what you're asking. Because your business may get a moratorium, but your personal account will also see that you don't get any interest. Much better to have a generalized lowering of the whole architecture of interest rates in this country. Everybody will benefit from this. It will happen in organized way. So that's an important thing. Now hand it back to the last question. I think Shankar wanted.
Yeah, I have one question. Last the same from Calcutta again. They are saying banking is still lethargy. Despite the RBI giving the lazy bankers a wake-up call, corporate need proactive banking where borrowing will have to go up and interest on flow come down. Because bankers are still, our experience is very also same. Bankers are not loosening up. They are still asking for so many documents. Nothing dispersal is taking place. You must be getting the feedback also not. And the same feedback is coming from Calcutta.
The banking system has to get on with it and do its job. We're all pulling our weight here. The businessmen, I talked about administration. Now it is the time of the financiers, my original profession. So let me ask my fellow bankers to roll up their sleeves and do their part of the job. They now have a lot of government guarantees that we have given them. There is no excuse now.
Before, let Shankar ask you a question, because that's the question. There are many more questions, but that's time is over. So let Shankar, please, go ahead.
So Sanjeev, you mentioned about at the beginning of the show and now about the reforms of the factor markets, basically labor laws, agriculture. So a number of these have been announced before, proposed before, declared before. I don't want to go into the details and the dates of how they were done or whatever. what gives us what gives us the confidence that this will be done before? For instance, the abolition of the dismantling or the modernizing of the APMCs to free agriculture was first July 2014 Committee of State Ministers, when one nation, one ration card, I think, has been announced about 5 times. So what gives us the confidence that things will get done this time?
Well, so the proof of the pudding is always in the eating. So we have clearly stated that we are going to do it. I don't think we could have been any more emphatic about doing it. I personally gone and written about this, about some of these changes, including the changes in the agriculture. Clearly, I'm here on your channel to say we are doing it. Some of these things many of the measures that were announced have already, some of them are getting done at the state level. At the central level, yesterday, a whole bunch of things got cleared by the cabinet. I'm sure one by one, we will do them. I don't think you could have had as clear and unapologetic a statement of willingness to do privatization in the non-strategic sectors. The trajectory by which we do it obviously will depend on the market and so on. So we may not be able to do privatization in very, very quickly, given that the market may not be the right time to do it. But I don't think there's been a clearer statement of intent ever before. So I think even in the case of Air India, I think we were well on the process of doing it and things have gone awry. But I think we are clear about what we want to do. We have signaled that clearly to you. And some of these things like labor laws, I think people would be, waiting for years, but some of them are just getting done. I mean, states are getting on with it and getting these things done right in front of you. So how much...
You must be aware, Sanjeev, the Allahabad High Court has given some order and UP government has withdrawn some of the labor reforms.
That's all right. There will be then reforms in India, even in 1991, did not happen in one step. There were back and forth, but that didn't mean that 1991 did not have an impact on the trajectory of India.
Abiding thesis about India is that crisis is a feel-good factor. I hope the crisis is not wasted. Thank you for your time, Sanjeev.
Thank you.
And
thank you, Sanjeev.
Many of the things are getting done. Thank you.
Thank you.
Thank you so much.
Thank you. Thank you very much.